Hey everyone, Dan here. We are just before market close on Thursday, April 8th. Wanted to take a look at a few stocks that I think are in good dip buy territory or are potentially about to be in good dip buy territory. And before we get into it, I have noticed that a very small percentage of the people that watch these videos are subscribed. So I would just ask that if you frequently watch these videos or if you enjoy them, please hit the subscribe button. It helps a lot. And at any video that you enjoy, please like it. That also helps a lot. And also feel free to share these videos. So if you're on Reddit or Twitter or Facebook or somewhere else that you share things. I'm not the most up to date on social media and that sort of thing, but anywhere else, please grab the link from the videos and say something about it and share it. That helps a ton, and I really, really appreciate it. Let's jump right in. So DraftKings is sitting here at 60.92 at the moment and is bouncing off of this 60, 66 level that we had plotted a long, long time ago. And so to me, this is a good dip buy opportunity if it holds this 60-66 level, which at the moment it is. And to me, that would have just indicated that it came down all this way to fill this gap, which we were looking at before. And that brought it down to about, lower 61s. But then what can happen sometimes when a stock moves to fill a gap, whether it's up or down, is the momentum from the gap fill can drag it up or down further and sort of surpass the gap. But then it's often going to pull itself back up or take a breath and come back down a little bit. So that's what I'm looking at with DraftKings. On the other hand, what I would look at is this green box, which indicates like mid to high 59s down to mid 58. So let's just call it 58.65 to 59.65 as another potential dip buy opportunity. And that just is the top area of like this most recent support here that this built off of, down to like a longer term support resistance area here. So it may come down and test those levels, but right now it looks like it's recovering well off this 60-66. So, to me, this looks like a good dip buy, maybe average down all the way down to that 58.50 level or something like that. And then maybe cut loss if it dips below that 57.79 and can't recover. Something like that would be a solid trading plan, in my opinion, for DraftKings. Tattooed Chef. So a couple of things. So I made this chart about an hour and a half or so ago. So some of this stuff is slightly out of date, but at that point I was looking at this orange trend line and, basically was going to say, Tattooed Chef was in this down channel that was pretty significant. So from upper 22s, beat it down all the way to the lower 18s until it started to recover, got itself well out of the channel by now. All of these black columns are days. So this is 1, 2, 3, 4, 5, 6 day out of the channel. So it's been out for 6 trading days. What I was looking for it to do is establish along this orange trend line, which, this is the lower point of the trend line, so we could just pull this down and say, okay, we want you in there. But I'd look for it to bounce off of this long-standing, this isn't a new price range that was charted, this 1921. This has been there for quite some time, and to me it's still respecting it, as we see here and here and here and here. So I would still say that level is significant to Tattooed Chef, so I'd look for it to start bouncing right about now, since it's done this like semi-retracement. And to me, a good dip buy would be in this green box, or screw the green box. If it just starts walking itself up off of this orange trend line, I would go ahead and just take my dip buy in that range there. And then I'd look for, upper price targets based on this. We can talk about that. Right now we're talking about the dip buying. We can talk about the profit taking in another video. But first, let's try to get the dip buy right before we worry about taking any profits. But that's what I'm looking at. Obviously, if it falls below this trend line and then gets stuck underneath this blue price zone, then yeah, maybe there's more work to do. Maybe there's another dip to be had, and if so, we can take a look then. But for now, this is what I'd look at with Tattooed Chef if you want to dip buy. PENN, like I said, I charted this a while ago, but PENN has started to form this channel, which is pretty cool. When I was looking at it, it was right down here. No, that's not true. When I was looking at it, it was right around here. And so to me, at that point, like these green boxes were really good dip buy zones because it indicates toward the bottom of the channel. So we'll see if it even gets there. It could start taking off toward the upper bound of the channel right now, which if so, maybe do some secondary analysis, see if it makes sense, or if you're just chasing. And if you're just chasing, don't just chase. Typically doesn't go well. But if you have secondary indications that this could be a good position to take, go for it. What could be happening here at the moment is that it's coming up to fill this gap, which it would have just now done. And now it might sort of expose a bit of a dip at the moment. Since it's up a little higher, I'd be pretty happy kind of moving this up a little bit because that's still very low in the channel. This is a pretty broad channel, to be honest, so it might tighten up a little bit, and if so, we can rejigger as needed. But it formed a little weird, but then because it did this second higher low here, which was actually the third higher low in the channel, I thought, okay, this looks like it's forming to me, and PENN is a frequent channel former, so I thought it was a pretty good opportunity. If it does fall out, I'd look for it to hold this 10103 zone, so you might get another opportunity if it comes down and falls out of the channel to bounce off of that. If not, and you're still looking for a dip buy opportunity, if for some reason it comes down further, I could see from this, like, say 100 down to low 98s as an opportunity, with a cut loss at this like 96.51 if it drops below there. Just to be clear, when I have these cut losses, this 96.51, I wouldn't go into my brokerage and set 96.51. I would set something like 96, 45, 96.40, something like that. Something that indicates, okay, the price probably fell below it significantly and either continued dropping or fell below it significantly and then 96.51 became resistance. If the price just comes down to like, 96, 47 or something, just a few pennies, and then comes back above it, it still has the opportunity to build really quick support there and jump off. So sometimes you want to give it a little bit of breathing room off of that range. Just sort of whatever amount you feel would be enough to say, okay, it's probably either continued down if it's hitting that, or it's going to turn that red zone into resistance because it's far enough below. But sometimes they recover quickly once they dip below there. Square is on a tear. So, sorry, I'm having a sip of water here. Hold on. I'm like semi-losing my voice for some reason. So, but we'll chalk it up to all the videos that we've been making lately. Square has been on a tear. So Square, I don't know, way back when, I think even like before this stuff. Oh yeah, it was well before this stuff because these prices are in green. We had said Square is about to pump. You can look at that video if you want to go back a few weeks and see my video there. And that has proven out to certainly be the case. Square is also a frequent channel builder. And so this is its current channel. It's blown through our previous upper price target at 248. And this chart has held up really, really well, especially considering how long ago we drew it. One thing I would be cautious of is there's a bit of a double gap here. Oh. Cautious of if you have a position or if you take a position at these highs, which I wouldn't necessarily suggest. But, it could potentially come all the way back down to like, say, 2.25, 225, 228, something like that to fill this double gap here. So I'd watch for that maybe. If it does start to fall out of the channel and seems to have some kind of rapid movement downward and maybe coming down to do that, that would give you a really good entry off of that like 228, 230 zone. So look for that. And then if it does just totally ignore those gaps and stays in the channel, then I would be looking for a dip buy here. This represents like the lower half of the channel down to, the bottom-ish area of the channel in the coming days. I guess we could extend this through tomorrow, would make sense, right? So let's get this into tomorrow. If it does fall out, I look for it to hold that 248.28 zone. And there's one more gap here. I'm actually not certain if squares frequent gap fillers. That's why I want to point it out, but I don't want to make too much of these gaps because it might be a nothing burger per square. It might be one of those stocks that just doesn't fill gaps. So let's take that with a grain of salt for the moment, but that's where I would look for square bouncing off of the upper bound right now and coming back down into a dip buy range, which is the bottom half of the channel. AMD, so there's a lot going on here with AMD. So let's just get rid of this. This is something I had just drawn in for my other video. So, you know, this in this channel right here, and what I would look for it to do is to go ahead and head back down toward the lower half of the channel. Same idea. Just get a dip channel buy on this and then ride it back up toward the upper bound of the channel. And you know, if it does fall out, I don't have any immediate price zones that I look at. Obviously, there should be good support around this like $81 level. There is always the possibility that comes down to fill this gap, which will give you a dip buy in the high 70s. So kudos if that happens. Sorry if you're holding, but watch out for that if you are holding, and watch out for that if you're dip buying. But that might give you a good area that if you do catch a dip buy here and it falls out to dip buy down into this range, set your cut loss below it somewhere, sort of accounting for, you know, if it catches some bad momentum, you know, it could fall down to 78, for example, just because it would have had such a sell-off. Mara has a lot going on in the chart, but we're just going to focus very cleanly on Mara. So we've been calling Mara pretty well for a while now. I don't think that this is a channel. I just think it's too steep of a situation. I don't think that this is something that we should consider as like a plausible channel. Okay, so just in case you like quickly notice that, I don't think that that's realistic. I think it's going to flatten out quite a bit, and then I think we may have an opportunity for it to drop back down and fill this gap. Okay, if it hasn't been filled, it may be. The wick of this candle, though, being that the wick represents a lot of this channel, it might have not been enough volume to fill it. I have no doubt that the red candle is, but the green is what I'm questioning. And so in that case, we may get it down here from about, say, mid 48s down to high 47s, and then hopefully bouncing off that 47.41 if it does catch some downward pressure. But if not, there's really quick support zones there at 47.03 and 46.65 as well. JMIA. So JMIA, I'd basically be looking for it to potentially come fill this here gap, which definitely looks like a gap to me. And so, you know, if you can pick up something in this range in the coming days, mid 37s down to like low 37s, to me that would be a good opportunity. If it does continue on there, it may be coming down to fill this gap as well. And in that case, you're looking at something like, you know, mid to high 36s down to high 35s. So look for an area in here. I guess I could draw that in to be more explicit, to sort of match the other one. So I think there's a range here. Now there's definitely the possibility that it just fills this top one and doesn't even worry about the second one. But just know there's there. And then, like I said, it either could be coming down to fill it anyway, or there could be enough downward pressure that it just continues down in. The alternate possibility is that it doesn't dip because it's starting to form this channel here, and maybe it's just going to work itself up and not even worry about filling gaps at all. And if so, then we'll draw on the channel and we'll look for a channel dip buy as opposed to a gap dip buy. We'll see what happens in the coming days. Corsair, CRSR. So this, I've been watching for several days now. You'll see some Twitter chatter about it. And basically, what I had been saying in the last couple of days was that watch out, it may be coming down to fill this gap here. And I think on the 5-minute chart, there's also a gap here, which you can't see. But basically, it has come down and filled both of those gaps. as far as I can tell. But I think predominantly it was filling this one, to be honest. I don't think this really did much of anything. So what I'd be looking for now, since it fell out of the channel to fill this gap, is for it to come back and start working its way toward the channel. And if so, to me, this would be all the buy zone. This green line, if it's holding steady along this green line, coming back up toward the purple channel, to me, that's good dip buy territory. If it pushes itself out of the green trend line, then you might be in a longer term consolidation phase, and you might want to wait it out and see sort of where CRSR is going to go after it consolidates and forms the next channel or forms the next trend line or exposes some gaps or something like that. All right. Well, I hope that everyone is having a good trading week. I hope this gives you some ideas if you are looking for dip buy and you have some cash on the side. And in any case, no matter what you're trading, I wish you the best of luck, and I will see you in the next video.